You have a company, let's call it USA. That's the name of the company. It's called USA. And USA as a company has a product that it sells, which is protection, security, infrastructure, and you pay them in a form of a percentage of your wages. That's how you do it. And what they've done is they've capitalized it basically through debt instruments. They don't have any equity. You don't have equity. You have debt. So you have an ownership of this kind of through the debt. And the debt that they have issued over the years has compounded dramatically because they needed to, for a lot of unforeseen expenses. Now the debt is blossoming and the company is taking in revenue through a part of your income. And if we eliminate that, what other mechanisms do we have to pay down the debt interest and to pay off the debt and to fund the company's continuing security infrastructure?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, got somebody back on the show, hasn't been on in quite a while. Somebody whose investing acumen and knowledge I put up there with some of the best. His name is Andrew Horowitz, disciplined investor. And sometimes discipline is good and sometimes it's not. But when it comes to investing, I found the only way to make money over the long haul is through a disciplined, very strict approach with firm buy rules and sell rules in place. Andrew, it's great to have you back on the show. And it's been years. I was on your show recently. Yeah. And tell me how things have been going. I mean, the market, we tend to overlook the fact that the stock market was the greatest creation ever for creating wealth. Yeah. And, you get into your family, you get into your business, and you kind of just don't think about it. And then you look at your portfolio, assuming you haven't had one of those infrequent crashes, and you say, wow, how did I get here?
Yeah. And it's amazing because I have, for example, I have family members, I have friends that have 401k plans, right? And their kids have 401k plans. And I've always told them, look, do me a favor. Just close your eyes, hold your nose, put money into your 401k plan. They're like, oh, well, I'm just starting this new job. I don't have the money. And then invariably I force them to do it. I'm like, look, just do a few dollars and let's see what happens. And somehow it's a bit of the sleeping beauty concept, right? They wake up a number of years later and they're like, whoa, wait, look how much I got in this 401k plan. I'm like, yeah. And if you didn't argue to begin with, if you didn't say, oh, look at all the money I have to spend on this or that, what happens is it becomes almost a regular occurrence that you don't even feel. And like, yeah, when I did it at first, it hurt for a minute. And then all of a sudden it came back to the idea that I don't even remember doing it. And just a message out there for people that are listening that if you haven't done it, and if you are one of those people like, hey, you know what? My employer doesn't match. It doesn't matter. Pre-tax money that has the availability to compound at a tax-deferred basis through a 401k plan or a Roth IRA or an IRA or any other kind of pension plan is one of the greatest wealth creation on top of the stock market. So you add the benefit of tax deferral. So if you haven't done so, it's important to end of year here to start thinking about what you're going to do for next year. And if you're age 60 to 63, starting in 2025, there's a super catch-up that's available where you can put an extra $3,750 into, I don't know what who picked 60 to 63, but it is what it is. If you're age 60 to 63, you get not only your base, your catch-up, but you have a super catch-up that you can deposit money to for your 401k to add even more money to your 401k for your future. So I agree, greatest invention. But then if you add tax-deferred compounding on top of it, even better.
Yeah, there's always that age-old thing of the Roth IRA, where you take your regular IRA, you convert it to a Roth, you have to pay taxes on it, but then you can continue to build up wealth tax-free and not pay any taxes on the distribution.
Right.
And so is the tax deferral that you get from a traditional IRA worth eventually paying taxes on it, or you do partial conversion? You know, it's an age-old thing. Where are you better
backdoor conversions? Are you better off with Roth? Are you better off with this? It all depends on how old you are. The younger you are, the better off you are to have a Roth. And then we have to ask the question, which none of us could answer, what's the tax rates going to be in the future? Higher or lower? The fact is, I'm putting $5,000 a year away, $10,000 a year, whatever the number is, into a regular IRA, and I'm getting a tax deduction for it, which is great. It gets tax deferral, which is fantastic. But now all of a sudden it's worth $500,000 in the future, and I got to pull money out of it. I'm pulling money out at a much higher tax rate or a lower tax rate, and I'm pulling out at a much higher valuation at that point. So a lot of questions to answer. There's no magic potion to this whole thing. The only thing I could tell you is do it. Some way, somehow get money working.
So, we've heard a lot of, this incoming Trump administration reminds me of JFK when he came into office. Difference being he brought in the eggheads, they called them. All these guys from Harvard, Yale, Ivy League come up with all these brilliant ideas that didn't work. But it was a period of great optimism. Now we got Trump here bringing in billionaires and really bringing in people who actually got real life experience. And one thing they talked about, I don't know how serious it is, but I'd love to see it myself, is elimination of the federal income tax.
How's that going to work?
Think that's possible? Can it be done?
Well, if we do, what mechanism? Well, let me ask you this, Kerry. You have a company, let's call it USA. That's the name of the company. It's called USA. And USA as a company has a product that it sells, which is protection, security, infrastructure, and you pay them in a form of a percentage of your wages. That's how you do it. And what they've done is they've capitalized it basically through debt instruments. They don't have any equity. You don't have equity. You have debt. So you have an ownership of this kind of through the debt. And the debt that they have issued over the years has compounded dramatically because they needed to, for a lot of unforeseen expenses. Now the debt is blossoming and the company is taking in revenue through a part of your income. And if we eliminate that, what other mechanisms do we have to pay down the debt interest and to pay off the debt and to fund the company's continuing security infrastructure? I don't see how it's possible. You see what I'm doing there, right?
Yeah, well, so he's talking about income from tariffs and perhaps a national sales tax, or maybe not a value-added tax, but VAT. I'm not sure what the difference really is.
Well, it's a consumption tax. It's a consumption tax. Yeah. VATs are. I mean, a VAT is a consumption tax. A sales tax is a consumption tax. The tariffs are a consumption tax. So now, what you do with that is you cause the potential for inflation to a degree, because things will cost more. If you don't include the tariffs and the tax, maybe not. You cause a potential consumption slowdown, potentially. But then again, it's offset by the fact that you're not paying federal taxes, right? I mean, look at it that way. I just don't see, is there anyone that's ever done that successfully? State of Florida? Could we use that as a... Could we use that as a model, maybe, where it's all sales tax and no state tax?
9 states don't have income taxes, right? And those states have boomed during the past decade, while the heavily taxed blue states, for lack of a better term, but they generally are blue, but not all, have not grown at the rate that the tax-free states have. So, is it just a function that the Florida, Tennessee, New Hampshire, Washington State, North Dakota, I think, or maybe South Dakota, I know them all off the top of my head, but those dates, is it just a function of people avoiding taxes? And if everybody taxed the same, we'd be in the same boat? Or is there more to it?
I don't know. I think this is a really big question because there's been discussion about flat taxes that never seem to work. But the problem is the complexity of our current tax system is a problem. There's no question about that. I think we'd all agree to this. I don't care who you are, that the complexity of the taxes and the ability for people to work loopholes is a gigantic problem. The corporate tax system is also a problem. So simplification is, I think, the first step, right? Before we can get into the idea of just elimination, I think simplification is a much more realistic way to go. And then from there, what we could do is try to maybe merge into the idea of what ifs, but I don't think we could do it. I don't think it can be done with this massive debt overhang that we have. I think it's the biggest problem we have right now in our government and our economy. That anybody that knows anything, if you are a household that has no debt compared to a household that has major debt, why is the Biden administration been so hell-bent, besides for votes, aside from that, put that aside for a second, why have they been so hell-bent on reducing or eliminating, disposing of student debt? Because they know the fact that from an economic standpoint, again, besides for votes, from an economic standpoint, when you graduate medical school, law school, graduate degree, even an undergrad, and you have a massive amount of debt that's outstanding, it is going to curtail your ability to really buy a house, potentially buy goods, grow. This overhang that you're going to have for a number of years it's going to be so constricting. It's going to be strangulating.
Sure.
And the debt that we have now, if you want to expand that to the debt that we have now as a country, is so preposterous. It is so ridiculous. The only way we could do it is inflate our ways out of it, or blow our currency out, which is basically what they're doing, right? The idea of devaluing and really looking at a currency to break it down, which they've tried to do, which is not working so well, or inflate our ways out of the bond situation. We tried that for a number of years, then we had COVID, and then we had massive spending, then we had continued massive spending. I don't think under Trump administration, I know there's the DOGE, I get it, the Department of Government,
Government efficiency.
Efficiency, right. I don't know if that's going to really, $2 trillion seems a little bit far-fetched, but maybe they'll find something somewhere that they can save a few $100 billion, which would be great. I just don't know if that is going to be enough with but that's what we need to do.
But if you're not touching Social Security or Medicare, then your hands are kind of tied from the get-go. But if you would just assume that for all the other departments, somewhere between 30 to 50% of the money is wasted. Yeah. And even in Social Security and Medicare, there's hundreds of billions of dollars a year of payments, wrongful payments that shouldn't be made.
That's a problem. That I agree with. That I agree. That whole industry, the prescription industry, the Medicare, Social Security can't touch. Medicare, on the other hand, the efficiency, well, there's fraud in Social Security, but let's put that aside for a second, because that's a whole different discussion on how to deal with the fraud, right? But I agree with you, Medicare, and fraud in Medicare, by the way, and just bloat, just stupidity. So that's going to be a big issue, I think, and not to mention the healthcare system in itself, and a lot of that's coming to light right now, more so. I think the shroud has come off of it's healthcare and it's just what it is, right? I'm getting denied, or I'm delayed, or I'm going to have to get some multi-level of authentication or something involved with this. I think this whole unfortunate murder of the UNH executive, CEO Brian Thompson, is awakening a reality that has been suppressed for a long time, which is that our healthcare system, the companies involved, it is a for-profit. I mean, when Obamacare came in, did you ever in a million years think that the companies like Aetna, Cigna, UNH were going to be extraordinarily profitable?
Oh, yeah.
Or was it like,
Do it.
did you do it?
Because they wrote it. They wrote the program.
Well, that's true also. But the idea was really to give the people a better shake, right? It wasn't that was the idea.
Yeah, well,
It didn't work out.
I mean, I didn't want to get like into a political thing, and we got more, but AI ties into this. But we've never had a national health debate in the United States since they basically banned cigarette advertising back in the 60s. All right. And created this educational feedback loop. Smoking's bad. It will kill you. Back when we were kids growing up, Andrew, half the people out there smoke. Now
I was one. Yeah. I was one of them. Marlboro Reds, man. Marlboro Reds.
Same here. I love that. And Winchester. Man,
that's something right there.
I'm dating myself. Wow. So we have this massive educational thing, and there's definitely less people dying from lung cancer and smoking-related diseases than were in the past. Heart disease, still number one killer. But bringing in RFK Jr., whatever you think about the guy, and I'm not a personal fan of his, but Make America Healthy Again, that will go a long way toward fixing the healthcare system. It's kind of a long-term educational investment, but forcing these companies to, usually in most languages for love, there's like tons and tons of words, but in the English language, we have more words for sugar than we do for love. When you look on the side of a package, they have 25 different ways of saying we're putting sugar in here and it's bad for you. So this educational thing, that will solve the problem in the long run, because 80% of most diseases, chronic diseases, which is what soaks up the bulk of Medicare dollars, come from lifestyle, which means people don't exercise and they eat garbage, right?
Oh, hold on a second. I just got back from Europe. You're going down this path. Let's talk about it, right? So I just got back from Europe. You look at some of the things that are going on with regard to the U.S., what we have in our food. I mean, the processing, let's just leave it there. Let's just nutshell the whole thing. The processing of food compared to other places. Now, life expectancy has increased worldwide over the years, right? I mean, when I was a kid, it was like you're dead at 70. Now 70 is like the new 40, right? So the fact is that one of the things is, a healthier lifestyle and drugs and all that, but we still have the problem here in the United States of processed food, and people don't care. McDonald's, people are going out to eat these fast foods. We're lazy. We don't want to make food. We don't want to be what they do in Italy, that somebody's preparing your food. Somebody in the family is actually preparing a meal. What do? We get these Tavola, or we get these other kind of things that could say, oh, God forbid I have to cook, but I want to make it look like I'm cooking. So send me a package that I can, put it in there, put it in the microwave. And that's a big problem. It's going to take years to unwind and to reprogram I think our collective understanding of what's good and what's bad. Is pizza a really good meal for us? I mean, it's probably better than some of the stuff you see in the store that's been processed.
Big Mac. Right. Better than Big Mac. Right. But maybe it depends. Like, there's a new pizza place opened up down the street from me here in Florida, and all of their stuff is homemade. The dough is homemade, non-GMO. Yeah. The pasta is made fresh daily. The sauce is made from scratch. But hey, tomato sauce has sugar in it. But nonetheless, not a ton of it. And yeah, it's healthier than.
But that's natural. That's natural.
I think
natural from the tomatoes.
The trend is the healthy, because what we're seeing, we follow trends because that's how we make money. AI is a trend where I think profits will be enormous. We'll talk about that. Healthy dining choices, educational programs, so that when you're eating food, whether it has the potential to harm you over the long haul. Because that's the thing. When you're eating Big Macs for 20 years, it's one thing when you're smoking a cigarette, that every cigarette takes 6 minutes off your life. That was what they sold us back then, which may or may not have been true. But you don't think of each Big Mac that I consume with fries and a supersized Coke is taking minutes off my life every time I eat it, right?
Right. So from a stock, so let me just weave this into the area because it is an investment show, right? So is this something that we should be shorting? McDonald's? I don't know. I wouldn't bet against that right now. Chipotle, do we short that? I mean, it's had its problems. And then you add in the Lilly or the A1C inhibitor drugs out there that are that are much more popular.
Hey, well, and big controversy over those weight loss drugs. I've taken Ozempic myself and lost 14 pounds and didn't have to keep taking it forever to keep that weight off. And I exercised like a fiend, so I had zero muscle loss. In fact, my weight resistance actually increased while I was taking it.
Cool.
So yeah, if you're a couch potato and you're going to passively lose weight, sit back on the couch and watch TV, right, then yeah, you're going to lose muscle and you're going to lose fat. But the very act of lowering your obesity or overweight state is healthier. All right. Now, you don't want to be taking these drugs the rest of your life, but anything that will do that to help you in your goal of controlling your weight, as long as it's not abused and it doesn't become a lifelong dependency, is a good thing, in my opinion.
I have a little bit of disagreement, by the way. I don't know necessarily that if, in fact, there are no significant side effects, if there are no significant side effects, and in fact, if it just does regulate the body's ability to metabolize food better, I'm not exactly sure if, in fact, it's not something that can't be taken for a long period of time. One of the problems we have here, we know that diabetes, high glucose, is a real big problem, and bigger than just simply saying, well, I have diabetes. No, I'm talking about the impact on other organs of the body and what it does. And obesity in itself, or at least overweight, everybody's like, I'm not obese. Okay, you're overweight. You're not skinny as a rail. You got too much, you're carrying on your frame. That also is around the heart, the fat, right? All that is a problem. And it leads to other issues. And in fact, if this is the miracle drug, whether it's the semaglutides or whether it is the trizipitans or whatever companies.
Got a new one coming called Triple G, which is going to be better than Ozempic or Mounjaro.
Is that Guy Fieri?
Yeah, it's called Triple G. It's an evolution from the tirzepatide. And it's
is that from Lilly? Is that from Lilly?
I think so. Yeah, I think Lilly's
interesting. They just increased their share buyback and dividend, by the way, just recently.
Yeah, and look, I fasted. I've lost weight naturally. All right, I lost weight when I had COVID, and and I kept the weight off. Key is keeping it off. You don't want to yo-yo. That's really bad for you. But anything that aids in that thing that doesn't do significant long-term damage.
Yeah, that's what I'm talking about. So that's why the stock is does. That's why Lilly's does so well.
Yeah, it's easier to keep the weight off than it is to lose it. Mm-hmm. That's key. That's what they don't talk about. But yeah, we were eating healthy food and we weren't programmed. The original biohacking, in my opinion, started with the barbecue potato chip because they figured out that they could put in sugar, salt, and vinegar, and it would basically turn off your satiety switch. Remember, you can't just eat one. And
no such thing.
All these flavored potato chips, and then we had the advent of the food kitchen. The corporate food kitchen that formulate the thing so you just keep eating and eating. And, they got rid of cane sugar, which would trigger satiety switch in your brain. And they gave us high fructose corn syrup. So this is a trend. But let's get to AI. It's, we know that AI is rapidly evolving. You and I both use it in our work. I've just used it to help me write a book of my interviews with a famous economist named Martin Armstrong, 14 years worth of interviews. I managed to write a book in several weeks.
Wow.
And I asked ChatGPT, what are the 10 industries where AI will have the most effect? And let me just list them, and then we can go over you.
Sure.
Healthcare, transportation, no kidding, finance, retail and e-commerce, manufacturing, education, we'll see about that one, legal, definitely, customer service, media and entertainment, and agriculture. So of these top 10, which three would you say are the most significant?
So healthcare, I think, is really interesting. That one particular, like, for example, radiology, right? So let's just break it down to its simplest terms, right? Take an x-ray, somebody looks at it. Okay, what's the deal? You broke your leg or whatever, right? Or something of that nature. Or an MRI. You take an MRI, it's reviewed, there's a spot or there's something going on. What is it, right? Well, that's great. What about the things that are missed, right? What about it's a human eye that's looking at something? There's an x-ray of the femur, of the tibia, of I don't know what, your ribs, whatever it is. And all of a sudden, there's something to the bottom right of the screen. We're not quite sure what that is, and it's overlooked. Whereas AI or better computing has the opportunity to look at that and say, well, you know what? That looks like this that I have in my memory bank. So it's not just relying on a great radiologist, right? So a great radiologist may have found that. Well, your average radiologist may not have. So the thing is that you are now, instead of going at a random radiologist that may be the greatest or the worst or an average radiologist, you have the memory bank and the ability that is constantly changing and updating of an AI radiologist, let's call it, right? Dr. AI radiologist, to now be looking at your x-rays, your MRI scans, your CAT scans, whatever that particular situation is, and having all of that at their fingertips to give you a better diagnosis. Then give it to the doctor and let them then further bring that to whatever has to be done. So I think that's just one little aspect of healthcare. How about drug interactions? So you have a situation where the pharmacy is dispensing a particular drug, and then there may be something in the system about drug interactions, but maybe there's more information that can be fed into there about your health history that would say, no, this drug is not going to work with that drug because of this. You'd be better suited with that drug, right? Or whatever it is. So there's a whole host of things that you can look at from an AI standpoint in the healthcare area. That even includes better robotic surgeries. That includes potentially better nutrition guides. I mean, the list goes on, because what you're doing is you're centralizing the knowledge, and then you're enabling the ability of that centralized knowledge, let's call it, doctor health, let's just keep it at that, to then train and look at all the different things that are going on and utilizing the inputs to further expand. So now, instead of having, pick your number of doctors out there in a particular space, in a particular specialty, that you may be just doing it and going to that doctor due to proximity, which is 99.9% of why you're going to that doctor is proximity, right?
Maybe
They're just
supermarket.
Right. Now, some doctors are different. There's maybe some specialists that you want to visit in Tampa or there or New York or California, wherever it may be. But generally speaking, the dentist I go to is I just not schlepping 35 minutes to go to this guy when these people are 5 minutes away and they did a great job. And if something goes wrong, I'll schlep. But that's the number one. Well, one of the top, not number one, not top. I think customer service, where there is none in some places. It used to be that you had a phone number that you would call all the time, make it very easy. Then there was the advent of an email, right? You'd find it somewhere, or it would be a button. Now, websites don't even have anywhere for you to call. You can't call anybody. Can you call anybody for customer service? You have to dig. You have to dig pretty hard, right? It's at the bottom, 3 clicks in with first chat to us. Then, do you really want to make a phone call? Do you really want to speak to somebody? I have the answers. Now, if we can get used to and get a good reacting chatbot that actually has answers, not just at the end of it, I'm sorry, not just a stalling mechanism, right? That most of these help support systems are. And I think that could be tremendously helpful for individuals that need it and companies that don't need to spend the money on, unfortunately, places that we've banished them to, like India and areas outside of the U.S. where you have the support centers. Third, finance is interesting, but for other reasons. I think there's an interesting aspect of finance, but I think it's compartmentalized. I think people still are going to need, if we go all AI for finance, I don't see it. It neutralizes everything, and I just don't see the ability for anybody to have better performance than anybody else. And what's the point if that's not the case? I don't see it. It's a neutral point. There are some areas that will be very helpful from a research standpoint, clearly. Being able to review and research a stock, obviously a lot faster. Being able to look at historical trends and analyze those a little bit better, no question. Legal, contract writing, clearly. A lot of this can be done today, but if AI really comes out in a better way to make it a much more usable and user-friendly way, I think that's great. What are some of the other ones you mentioned?
Just legal, because I'm a recovering attorney. There's no institution that is less efficient than our courts. They're the least efficient means of resolving disputes, the way they're managed. The judges are, average judge works half a day, in some places, be surprised. And the cases keep piling up and piling up.
Well, what about the law offices, Kerry? What about the fact that when I deal with a lawyer, I'm dealing with 3 layers and 3 bills at the same time?
Yeah.
That's absurd, right? You send something in, the administrator copies it, and you got to pay $5 for that. They send it back to you saying, thank you. That's a 5-minute charge. Then they got to go through the next person, and everybody's doing one piece is 3 times the charge it should be.
Well, I always say anyone who says that crime doesn't pay, obviously never passed the bar exam. So law and the inefficiencies, like the purpose of the judicial system, is peaceably settle disputes among the residents and the inhabitants of the country. And when it starts failing in that role, bad things happen to society. So anything that can help make the judicial system more efficient. And then you also have this situation where big XYZ corporation and little John Doe, John Doe's been legitimately aggrieved, but he can't afford to go up against them. But now maybe with the upcoming AI, he'll be able to do most of it on his own. And then the court will be using AI to figure out what's going on here, right?
Right. I agree.
Maybe.
It's an interesting concept. I just think that that there's a lot of other industry areas that will create more efficiency. Some of them are like, yeah, I would love that to happen. That would be great. That would be wonderful. There's others that, well, man, why hasn't that happened already? And the efficiency will be cost savings, and that can be passed along or made companies more profitable. That's the thinking right now, right? We're in the stage of AI that everybody's excited about the fact that the opportunity is there for creating cost efficiency across, many places, with the idea, once again, that people are not going to be displaced, which I do not believe. I think that we continually displace people. And it's like, yeah, but they'll get jobs somewhere else. Okay, where? Go on technology. Doing what? Coding. Well, wait. Didn't we just talk about the AIs are taking over the coding?
Yeah, they could code it, right?
I'll give you an example of something. DH Unplugged. Each and every week we have a show. John C. Dvorak, myself. You listen to that, I know. And we have cover art for each episode. So in the past, we've had various places do cover art, or we would have listeners would send in cover art, or we'd use, not custom, but something that would represent, and we put some words on it, whatever. Now, ChatGPT. I need a landscape podcast cover art with two guys talking into a microphone. It's Christmas time. I'll just make this up. It's Christmas time. There's money flying everywhere. The name of the podcast is DH Unplugged. Make one of the players, one of the podcast hosts, taller than the other. Blah 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 blah. And then you get 3 different versions. Cover art done.
Amazing. Yeah.
In less than 5 minutes. In less than 5 minutes.
I used to pay somebody between $1,200 to $1,500 a month to do my show notes, because I do one show a day on average, sometimes a little more. And then I got the note taker for Zoom, and then I fed the notes into ChatGPT. It gets done instantaneously. It's 95% of the way there. I can handle the rest myself, and my workflows become so much more efficient. And the thing is, we see it happening now, but we have no idea how fast it's going to happen, Andrew. Like, I will just tell you, like, I'm a proud Tesla owner, not because I think I'm saving the planet, because I love the tech. Driving experience is the greatest car ever. And the ability to continually upgrade a product that normally you'd buy the car, and then from that point on, it just got worse and worse and worse.
Right. It gets older.
Yeah. The Tesla, it never happens. It's always something new. Now, the full self-driving. Now, I've been doing it for about 2.5 years. And I said, if you let that thing do the full self-driving, you'll die. Back 2 years ago, 2.5 years ago, 83 now. Now, I just updated the latest version. I haven't gotten to use it yet, but I've been watching videos where the thing does U-turn. You push a button that backs out of your car, out of your driveway, out of your garage, closes the garage, and takes you where you're going to go, and then you point to a space and it parks. And but the bulk of the improvement didn't happen over the past 2.5 years. It happened over the past 3 to 4 months. Wow. When the AI started watching movies of people driving instead of trying to program for it, and it learned on its own. And I think in another 6 months, Andrew, we could have FSD. Does that make Tesla a buy, or does that make it easier for somebody else to come along and replicate what they're doing, some Chinese company or whatever?
I mean, the truth is that, does it make Tesla buy? I mean, since the election, Tesla's been going vertical, right? Over $400 per share right now on no news. And in fact, on the potential for, concerning trade action against China or with China. And full self-drive, FSD, does it happen? Is it getting better? Is that why? I mean, I think it's all about really the regulation and favoritism of what Musk is going to get because of who he helped get into the White House, right? That's more so what it's about. But Tesla, I don't think it's worth the value that it's worth right now. There's no way. I mean, the company was actually in the 200s not too long ago because the numbers that came out from buying. Now, will all the conservatives turn around and all of a sudden love Elon because he helped and buy Teslas? At the same time, the Trump administration is already talking about, or the incoming is talking about removing the tax credits.
Which they should.
Which they should. Well, that's not great for Tesla.
Probably won't matter that much. The other thing with Tesla, though, is that through their AI and through their systems, they've continually lowered costs.
Yes.
For the most part. Plunging lithium prices didn't hurt either. But the average cost of the Tesla is like less than it was 3-4 years ago to produce it.
Right.
And that's something that that American industry largely has been incapable of during my lifetime.
Yep, I hear you.
So, interesting thing. But get back to the AI. So, of all the industries, everything that we deal with day in, day out, what industry do you think will be impacted the most by AI?
I think healthcare is technology, but put that aside. That's obvious. That I don't think we have to talk about that. I do think, finance is interesting. Like you said, healthcare is probably the number one that I could think of off the top of my head. That would be transportation's interesting. Infrastructure, not so much. You still need, you see only picks and shovels, people breaking their backs to do things.
Yeah.
I would think that healthcare could be a significant overhaul. Significant.
Yeah. I think you're right. And just on multiple levels, the ability to get instant, up-to-date information on what you're eating,
right,
and the drugs you're taking, and then the ability for doctors to not make mistakes. Maybe we'll be having these robots in the hospitals, and that will be...
We have them. We have them already. But what's interesting, if you want just confirmation of this, just look no further than Apple and why they are all in on the Apple Watch and the healthcare and what they're doing with blood and pulse and O2 sats and everything that's going on with the Apple Watch. I one day will have an Apple Watch. Right now, because of these and my inability to see anything, I think it would annoy the hell out of me having to put on glasses all the time. Yeah, well, maybe you can see better than I can, but that's another thing. We have a lot of things happening. For example, one of the greatest things that are happening right now is the innovation is happening so fast. The old cataract surgery where you replace your lenses because you have cataracts is now available to anybody just to replace your lenses and you get perfect vision. I have 3 friends that have done it. Perfect vision.
That's called lens swapping. And I looked into that, but I've had some other issues with my eyes. So I don't want to mess with it, traumatize my eyes. But basically, the risks are extremely low. It's expensive, but you can see the day when it's like, you have to do it after a certain age when your eyes stop changing. So you can't swap lenses for like a 18-year-old who just got glasses for the first time, 16-year-old. But you can see where it's all heading. So how do we, using your approach as the disciplined investor, make money off of this AI trend? Is there a way to make money? Is it too uncertain and we just don't know? And all the easy money's been made off of NVIDIA.
Well, right now, the picks and shovels, the NVIDIAs, AMD, by the way, we're short, just as a full disclosure, we're long NVIDIA, short AMD. There are a lot of long Microsoft, the players, long Google. These are the players that have the picks and shovels, right? Long Amazon. These are the names that you want to be looking at in the first stage. We're in the first stage, by the way. We're in the early stage of this. How it goes from here, there's a bunch of companies that are saying that AI like AMD, they're not. That's why, we shorted them at 158. They're in the sub 130 right now. And you look at the opportunity from companies that are providing things like a Dell. Opportunities are enormous for service space, for build outs, for what they have to do to generate this. The utility companies, major play. You look at the SMRs, the small modular reactors for nuclear energy. You look at the utilities for their ability to basically provide the electrical that needs to be utilized to run these massive energy-sucking computer systems, storage facilities that are being built. That's another play that why utilities are generally close to, but not at all-time highs or 52-week highs. Amazing. Who would have thought that in an interest rate market that has been pretty much stable, in a market that people want growth? We're going after the most conservative. Utilities, I would think, right?
Your grandfather's utility.
Yeah. Widows and orphans.
Right? Yeah, it's paid off the dividends, big dividend. One that I like, that I actually own, and I'm not telling anyone to buy it. It's appreciated nicely over the past 6 months, is Dominion. And the reason I picked them is because they're Northern Virginia's electrical utility. And who's the biggest user of AI, Andrew?
It's got to be the government.
And the intelligence, Langley, Virginia, and that whole AI intelligence infrastructure around them. And I read an article recently that if you want to build a data center in Virginia, you have to make a reservation with Dominion 2 years in advance to do that.
Right. And that's why we own a Palantir, by the way, whose AI, particularly for the government or governments. And that's why Palantir, which was an underloved name for a long, long time, has really, look at that stock, it's done incredibly well for us, for our clients. So actually, we trimmed a little bit of that yesterday or the day before. We trimmed a little bit of our profits. It just was such a magnanimous move that we felt that we should take a little bit off the table.
So here's a question for you, Andrew. When you a buy and hold guy, or when do you sell? Obviously, you're losing money. You're going to cut your losses. But when do you sell when the thing is making money, like NVIDIA? You just set it and forget it?
So we have rules. We have to have a consistency of earnings, consistency of growth of revenues. We have to have high, what's called ROE, return on equity. We have to have a certain margin expansion. All these rules go into play. Don't make any of those. If in totality there's 15 rules, any of those that you don't make, you're out. You have to be the cream of the crop with the equities that we own within our, it's called the Disciplined Investor Managed Growth Strategy. Inside that strategy, we could have 30 stocks, we could have 60 stocks. And the more stocks that we have, the more allocation we have towards equities versus, for example, Palantir is as we call it, an alpha position. That is something that we will trade around. NVIDIA, Google, that I mentioned, Microsoft I mentioned, are names that are part of the strategy's core filtering system. So, we add things. We had a couple of interesting ads this quarter. But if you don't make it, you're out. We've had NVIDIA for a long time. There was a time it was out, but generally speaking, for the last few years, NVIDIA has been in our portfolio. We trim it every quarter. If it grows dramatically, we'll trim a little bit off, take the profits, and rotate it back into other things that we're buying. So it all depends on what particular area we're working on. We work on the trading side of our portfolio or for stocks in the managed growth strategy because it's separate than our global allocations. Or are we in the trading side of it? Or are we in the, for AMD's a trading position, for example? Or are we in core positions?
Do you care about dividends? Do they make any difference in your...
Nope, not at all. This is a growth strategy. Dividends are really not something that we will rely on. It has to be the basic tenets of certain levels of growth on a year-over-year, quarter-over-quarter. There's a time periods of earnings, of revenues, of consistency of margin expansions. All these are consistency points that we have to have to show us that management can not only say something but deliver, and that they're actually doing it
consistently over time.
Yep.
One thing we never even really talked about with the AI and all the technology is housing. Housing, the way we build stuff now has definitely been impacted by technology. Yep. But it still takes a year to build a big house. It still takes 6 to 8 months. And, I think that new materials that AI will create and new methods and we've had stuff where you cast in place and then, precast concrete panels and all that stuff. But I think we're gonna see a huge boom there as well, and robotics and all that might very well bring down the cost. All right, so Andrew, just tell us where we find you, how we connect with you on the web.
Yep. Just go over to thedisciplinedinvestor.com. Look me up, Andrew Horowitz, investor or something like that. You can find me on the site. There is all the information about our various strategies. The 2 podcasts that we do per week, The Disciplined Investor, DH Unplugged as well, which is pretty fun. We have a lot of great guests on. We've been doing this since 2007, the podcast, one of the original podcasters out there in the area of finance.
You got me beat. I started in 2010, and I thought I was ahead of the wave. Hey, well, anyway, we'll have a link in the show notes to this interview on financialsurvivalnetwork.com. And we just ask that you sign up for your free newsletter, like over 60,000 other FSN community members have. And if you got a question for Andrew, myself, shoot me an email, KL at kerrylutz.com. Andrew, always a pleasure. We'll talk to you again real soon.
All right. Have a great holiday. Thanks so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.